Hello and welcome to our podcast, IG's Trading the Markets. I'm Victoria Scholar, and this week we're going to talk about the US tech sector because a whole host of technology heavyweights have or are about to report earnings this week in an unprecedented period for the global economy and the markets. We've got Apple, Amazon, Tesla, Facebook and Microsoft, just to name a few. Dan Ives is joining us today, and he's the head of tech research at Wedbush and is frequently on CNBC and Bloomberg sharing his wisdom. Dan, great to chat to you as always. Thank you so much for your time. Now, a quick question firstly. As an analyst, this must be a really tricky period in terms of getting those projections right. How do you even start trying to factor the coronavirus into your estimates?
Yeah, and it's great to be here. I could tell you, look, in 20 years of covering tech, it's probably the hardest by far I've ever seen in terms of estimating numbers. And that's why with a lot of our stocks, we basically have stress tested and done more of a scorched earth type model to do valuations, because I think that's the best way to do it in this environment. And I think it's something that investors are factoring in. You're seeing a lot of bad news factored in selectively to different names, but also it speaks to why tech is more of a safety blanket sector because of the secular trends that are maybe benefiting tangentially in this COVID-19 environment with work from home and the cloud names front and center.
Yeah, it's been interesting actually because it has proved to be relatively resilient compared to some other sectors. A few stocks in particular, the likes of Netflix or Amazon, for example, whereas in the bull times was also seen as a real sort of outperforming stock during those periods as well. Now, in terms of sort of the overall expectations, I know we've already heard from Netflix and Alphabet. Just how bad do you think this quarter is likely to be for the sector overall?
Well, I think it's a tale of two cities, because when you look at Amazon, they're benefiting on the e-commerce and on the cloud side. So I think that's one. They could have elevated costs, but that's going to be strong in terms of overall numbers. I think the same from an engagement perspective with the likes of a Facebook, that when you have consumers just sitting at home, you're seeing engagement as well as on the advertising side starting to spike back up. And then the biggest thing is in terms of cloud. You look at Microsoft from a cloud perspective, they're one that's benefiting as well as Amazon on the AWS side. Look, the one tech name that continues to be in the eye of the storm, both in the supply chain and on demand, is Apple. Because it comes down to, in the consumer environment, jobs, health, groceries, toilet paper, the average consumer is not focused on $1,000 plus iPhone. And that's why that's the one that continues to be more of a Friday the 13th type of quarter.
So it's interesting you say that about Apple, obviously, because it's being hit on a number of fronts. We know there's the whole manufacturing in Asia side of things, and obviously the consumer demand as well with the closure of all of its stores. Do you think that online sales will help to plug the gap at all?
I think it helps, but it's a rounding error relative to the overall headwinds. Because in a global lockdown environment, just to give some numbers, we're thinking about 30 million iPhones this quarter. A year ago, it was north of 40. So you're talking, down 25%. And I think when you look out, the big question is in terms of the next product cycle, the 5G product cycle. What does that look like? The timing? Because Apple gets one shot at this. The last thing they want to do is release what I believe it's as big as iPhone product cycle, at least since 2015, potentially in the last 10 years, into a tempered environment. So that's going to be the big question going into Apple's numbers in terms of timing and just like you said, how bad it gets as they rip the Band-Aid off June.
Yeah, and it'd be interesting to see with iPhone sales as well, just how big the hit is, because on the one hand, smartphones are now essentially an essential good to many people. They're a consumer staple. But with Apple's high price, are people going to substitute away from those phones if we do find ourselves in what's likely to be a recession or even a depression?
No doubt. I think that it speaks to they're a victim in a recessionary, a deep economic abyss. They're going to take it on the chin front and center. Because consumers have less money to spend globally. $1,000 looks a lot more expensive than it did 2 months ago.
Yeah.
It also speaks to why Apple released the SE, which is more the budget or the entry level iPhone $399 starting point, that could be 20 to 25 million units for the year. But I think that's why right now, from a stock perspective, you're seeing investors for Apple look on the other side, dark valley. They're not buying it for the next quarter or two. As well as also the services business gives a lot of protection on the valuation. I think about 5 to 600 billion of protection.
What about Amazon then? I mean, from my own anecdotal perspective, I've been ordering a lot more things from Amazon than I normally would. And investors clearly agree when we look at the share price, it's close to all-time highs. You mentioned it as one of the stocks that's likely to emerge as a key winner this quarter. Is that your top pick? And do you think that it will live up to high investor expectations when it comes to the earnings?
Well, I think it will live up to high expectations because of the e-commerce and cloud. It's the 1-2 punch. I mean, they're seeing the strength on both sides. I do think it's one also that's important for the market and for the overall sector. And I think you saw it on Netflix. I mean, you'll see some knee-jerk reactions day or two after the quarter. But overall, I think FANG earnings are not going to disappoint. Now, in terms of the top pick from a risk-reward, I continue to view it more of an Apple relative to risk-reward, owning it for the other side of the dark valley, or a Microsoft on cloud in terms of names to me that are more compelling relative to where they're priced today.
So what about Tesla as well? Obviously, this is a very different story. You've got a neutral stance on the stock, and it's really a stock that has always divided the bulls from the bears. I mean, what is it that we should be looking out for in the earnings? Is it mainly the deliveries guidance, would you say?
Yeah, I mean, I think at this point, they already delivered March numbers that were better than expected. When you look for the rest of the year, just to give some numbers, Street originally was, let's call it 530 to 550,000 units. Now whispers are close to 400K. So numbers have come down significantly. I think the big focus in Tesla is going to be the trajectory for the year. When does Fremont reopen? Remember, there's the San Francisco lockdown, which just got extended, and the cash burn. Now, look, if you look at the stock, it's a parabolic move. Bulls are basically looking past March, looking past June, focused on the other side. I think a big part of the rally has been China, because China is a key linchpin to the bull thesis in Tesla. So I think there's going to be a lot of focus around what the Chinese numbers look like at a Giga 3 in overall demand.
All right, Dan, thank you so much for your time. That's all we have time for today.
Thank you.
That was Dan Ives, Head of Tech Research at Wedbush. I'm Victoria Scholar, and thank you so much for listening to our podcast, IG's Trading the Markets.